Good morning. This is Larry McMillan with a stock market update on Monday, October 23rd. So the market fell back last week and has fallen all the way back to the 4,200 level, which was support before. It's a little bit under its 200-day moving average. And it's also very near the trend line that connects this bull market, the last October's low with on the previous March low of 5 months ago. So those things should potentially supply some support. The problem is that the picture is still fairly negative. The chart itself of S&P has lower highs and lower lows. That's a bearish trend. The last rally was really pretty weak. It failed right at the 20-day moving average. It did not close that gap on the chart. And so while there are now, again, oversold conditions, and that might produce another small rally, the trend of the market is still down right now. So that's going to be the reason that we're still holding a core bearish position. There are some other things coming along in this time of year. There is a seasonally positive pattern that develops at the very end of October, so that might help things out a little bit too. Equity-only put-call ratios are still mixed. The standard ratios on a buy signal, while the probably more important weighted and total put-call ratios are still making new relative highs, meaning they're on sell signals. If they were to roll over and head downward, that would be bullish, but so far that hasn't happened. Breadth was really terrible last week, and so the breadth oscillators are back on sell signals, and they're in deeply oversold territory. So again, that could provide some fuel for a short-term rally. The number of new lows on the New York Stock Exchange on Friday was 401. The number of new highs was 4. Not 400, just 4. So this indicator remains very negative, but it's also kind of oversold with that huge differential. Probably the biggest change has been in VIX. VIX has been moving higher. It stopped out a previous buy signal that we had, and we'll try to set up another one. But perhaps most important, there's now what we call a trend of VIX sell signal in place. And that's going to continue to be in place as long as VIX is above its 200-day moving average. So we'll see how that develops. But the last time that happened, the market dropped pretty sharply, and usually does drop pretty sharply, not necessarily for a long period of time. The last one, I believe, was just about a month. It was registered in September of 2020. Anyways, the term structure of VIX futures is also a little bit worrisome. November is now the front month, and it rose above the price of December by just a few pennies. So that's not really a sell signal, but it's certainly worrisome. And if that were to increase to, say, 50 cents or $1 even, that would be very negative for the market. So again, a potential thing that we're keeping an eye on. So I invite you to visit our website, look at our daily newsletters where it's easier to keep up to date with this ever changing market. And meanwhile, have a great week trading.